everyone, Jason Sherman here. In today's episode of Zero to CEO, I sit down with Roy Snarr, who's a top 1% finance professional. Man, to get into the top 1%, that's got to be a tough thing, right? We're going to be talking about mastering financial protection and retirement strategies. So welcome to the show, man.
Hey, thanks so much for having me on. This is going to be fun.
It is. And you know, one of the things that I think about when I think about life insurance, it's maybe you know this, people are listening or watching, is Bing, right? The guy from Groundhog Day, he runs up to Bill Murray. He's like, you got life insurance? If you don't have enough, you got to get more, right? Got to get more, right? And he's like, Bing. And he like, it just reminds me, that's the moment that reminds me of life insurance. And it kind of makes me laugh. So what I want to know is like, look, out of all the businesses in the world, why did you choose insurance? And like, what was the moment in your life where you were like, I want to do insurance?
Yeah, well, I wasn't a little kid saying, when I grow up, I'm going to sell life insurance. That never happened.
Right.
But, and I think a lot of us in this industry, we kind of fall into it. My background, zero white collar financial professionals in my family tree, right? We were literally glorified hillbillies. I grew up on a farm, cutting trees down. Then I lived in California with my mom during school seasons. And so zero background in finance.
Interesting.
Yeah, so it was really unique. I never thought in a million years that I'd ever be in the financial services profession.
So what was the catalyst? Like, what was that thing that happened to you where you said it fell into your lap? Like, what was that?
Yeah, so the catalyst started when I was about 14 years old. My mom became disabled. Somebody sideswiped her, and we ended up losing like virtually everything. And then that occurred in 2001, where the .com bubble burst.
Right.
And so, at 14, I'm worried about bicycles, Pokemon cards. I have no idea about life or reality.
I hope you held on to those Pokemon cards.
I do. I still have the original American holographic set. And my wife's like, you should sell those.
Sell that.
I can't. I just can't let it go.
I know how you feel.
But yeah, anyway, so that occurred and it stuck with me. And I remember us getting a check, and only one check left because she lost the job, lost the house, like everything got taken away from us.
Sheesh.
It was a Social Security disability income check. And again, I had no idea what that was. But as I got older and more curious, I was like, how could we lose all this stuff? I mean, is there a way to protect it? What are stocks? What's insurance?
Right.
And so I started just nerding out on all this stuff. And then long story short, I was always asking my friends, hey, what do your parents do for a living? I'm not going to take advice from my friends. I mean, they're buying the same cheap beer as me in college. So I was like, what do your parents do? And then one guy said, hey, I have a friend that is in financial services. I was like, I've always had kind of an interest in that.
Right.
And long story short, I created my own general agency, and we focus on asset protection. That's my sole purpose. And we've been rocking and rolling now for close to 15 years. And the best part, my mother is still able to work with us.
Oh, nice. So she's okay. Yeah. So she's still, that's a really cool story and a great turnaround on like losing everything. I can't even imagine. I mean, look, I keep seeing, like, I just saw the hurricane happening and like everyone losing their homes and like, it's like there has to be some protection, but what I'm seeing there is not when it comes to natural disasters. From what I'm seeing, there's not a lot of protection and people are just losing everything. So, yeah, how do you plan for something like that? How do you plan for any kind of disaster or any kind of like what happened to your mom?
Yeah, well, most people don't plan at all, right? Because none of us want to think about the worst case scenario. And I'm a very positive person. However, I always think of the worst case scenario. And that's what we instill in our clients. It's like, look, if everything does work out perfectly, sure, you'll be able to cruise around the Caribbean and have a great life. But what if it doesn't?
Right.
Has anybody sat down and shared with you, like, what if this happens? And most people say, no one has. And so that's where we come in. We don't actively manage people's money in the markets. Rather, we help ensure that they have money in the long run and protect all their assets, because the financial planning model is generally recommended upside down, where most people will put money away into like a retirement account before they have protection. What happens if you get disabled or pass away or have a chronic or terminal illness? You're going to blow through all your retirement assets. What happens if it's a natural disaster and you need additional money? I mean, there's all these things.
And we're also, you're mentioning all this stuff about like retirement, and I keep noticing like they keep toying with the idea of getting rid of Social Security. And I'm like, well, hey, I'm 48 next month. Am I going to get Social Security when I'm 65, 70? I don't know. So I have to prepare with my own investment account, etc. But most people, like you said, they're not planning for these things. And, there's also like risk assessment, like you just said, like what ifs, right? There's like actuaries for that, I think it's called, right? They're like doing the risk assessments, the percentages of likelihood of things happening to you. Like, but people, like you said, they don't want to focus on that. So let's say that, people say, okay, fine, Roy, I want to talk to you about what ifs. What are
Sure.
what are the top three things you would tell a new person? Say, these are the top three things you need to watch out for and how to protect yourself from those three things.
It depends on the age too. So if you're over 50, it's a little bit different conversation than
Let's say
under.
some, let's say millennials and Gen X.
Yeah, millennials, Gen X, perfect conversation there. Now, see, they can take a chance on if the markets crash and then it can rebound itself up. They got one thing on their side, time,
Yeah.
right? And so that's a huge asset. So generally people and now in those two age demographics, we're going to look at protecting what they're building, and which is their wealth, their home, their family. And that comes down to life insurance, which is to a lot of people incredibly boring. And a lot of people don't think of it.
All right,
And
let me just stop you for 1 second, only
sure.
because my father's life insurance just ended. He purchased term life and he had it for I think 20 years. And so I didn't know this until he told me, oh, my life insurance is running out and I'm not going to renew it. So now he has no protection for my mom in case he passes. Now,
right.
explain that. Explain to me why life insurance, which is supposed to be like for your life, all of a sudden ends right before he turns, 80. How does that? What's that all about?
Lack of education. Because see, if you're selling insurance, it's much easier for me to sell you a policy. Hey, Jason, it's $20 a month and you get 250,000 in coverage for 20 years. Oh, cool. That's good. That's perfect. In 20 years, we'll have all of our things. Everything will be paid off and the kids will be out of the house. We won't need it anymore. Well, that rarely ever happens, right? So a lot of times it comes down to the agent that is selling the policy. Most agents, they don't educate clients on what they should have. They're simply selling a product. So that's what makes us different. We actually do asset protection planning and be like, look, term life is great because it gives you a large amount of coverage very inexpensively during the most important times, mortgage, kids, debts, everything else. However, you should also be cognizant of the fact that you're probably going to live a long life. And if you outlive this term, it's not going to pay. So oftentimes we do a combination blend where we say, let's get some term because it's cheap because you need it and we're on a budget, but let's also get a little bit that's guaranteed forever just in case our health changes or anything of that nature. Now on your father's policy, just real quick, you might want to look at converting it into something, locking it in his health rate that's available.
Right.
But for most people that are older now, if he wants to buy the same coverage, he may not even be eligible for 20 years because of his age. Right. And then his health is probably different. But more importantly, he's older, right? The closer to God you get, the closer they are to stroking a check, the more money you're going to get. That's just the reality.
So let's go back to the tips, like the top three things that people got to look out for and how to protect yourself.
Number one is an emergency account, because a lot of people that we work with that are like in my age bracket, I'm 37 and I started this when I was 22.
Lucky you.
Yeah. But you got more hair than I do, so it's all good.
Barely, but yeah.
You're hanging in there. Is an emergency account. A lot of people, they'll buy a house, they'll buy all these cars, they'll try to put money away in 401k, trips,
and clothing, and all sorts of crazy stuff. Going out to eat all the time. I keep telling people stop doing that. So how much should they have? What do you consider an emergency fund?
Well, I mean, if you look at the textbook definition, it's 3 to 6 months, but our definition is a year. I say, look, worst case
1 year of being able to pay your mortgage or your rent, your car
insurance.
Lifestyle. So basically, no worries about your bills being covered for one entire year. Let's be clear about that.
1 year, 1 year. All your bills paid, and then ideally, if you can, your current lifestyle supported for 1 year.
So if you go out to eat once a week and you go to the movies and stuff like that, that should also be included. It's like entertainment as well.
I like to have that included, yes, in our recommendations, because where it comes down to is like, yeah, the amount of return that you're going to get on money that's 100% liquid and safe is not much. However, the subconscious feeling of relief that you gain from that is immense, because most people don't have anything. They're just relying upon credit cards. But if you know that worst case scenario, if I get sick, hurt, or I get laid off, or a natural disaster, something occurs to me, I can coast for at least a year. Man, that makes you feel way more confident in future purchasing decisions and then retirement planning.
So then you're 37 and you're probably seeing the same type of videos that I'm seeing online of these millennials complaining of like, how am I supposed to save for that when my bills are so high and inflation is so high and my income is not so high? So how do they put away like half of their income if they just can't afford it because they're living paycheck to paycheck?
Yeah, well, there's two trains of thought there. One, some people are not built to be entrepreneurs, and that's okay, right? Not everyone can be an entrepreneur. But if you have that little bit of a bug in you, then you should start diversifying your income streams and creating additional revenue. Secondly, if you're more of an employee person, clock in, clock out, that's totally fine. But then you need to really focus on upgrading yourself and elevating. See, a lot of times people in those generations are like, they're going to complain and blame the world. Well, ultimately, it's your own fault,
You
right? So
can you can better yourself, get more skills, upgrade
you
your
can,
job,
yeah,
work on the sides, deliver Uber Eats, whatever you got to do to make that extra.
totally.
I totally agree with you. So I actually want to move on to the second point because there's some other things I want to ask you and we're running out of time. So
Sure.
quick last 2 points on how what to look out for and how to fix it.
Okay, well, number one, you got to have emergency.
Emergency funds, right?
Number two, you got to have insurance to help protect your assets in case
Okay.
you're not there generating it. And number three, if you're looking at generating more additional revenue, is invest in yourself first, right? So a lot of people will say, "Hey, look, I have $10,000 I'm going to allocate per year, or 5,000." And if you're stuck in a position, I say, "Hey, why don't you take that 5,000 instead of putting it to a retirement account, getting 7 or 8% return? Why don't you park it into an educational course or some coaching or mentorship and have lifetime value that can make you millions of dollars?" And so
Bingo.
that does take a special person to understand that, but it's more important to invest into yourself, especially when you're younger, because you have time to reinvest later. But the dividends that pays in yourself, no one can ever take away from you. So investing in
With
yourself.
that, I'll say bing. All right, so because that's what he would say on Groundhog's Day. So now, what about Social Security benefits? Does that kind of go into the retirement plan?
It does.
What should people know about that? Because it's kind of murky as far as I'm concerned.
Yeah, so for most people under 40, they're not really too concerned about it because it is what it is and we can't control it. But those that are over 40, especially those that are in their like turning on Medicare at 65, they're really concerned about it. And I wrote a book on Social Security and I'm a national Social Security advisor.
Whoa.
I don't work for the administration, but I just became an expert in it. And here's what it boils down to. People are worrying about it going away. I
Yeah.
can't control that, but in my professional opinion, my colleagues, it's not going anywhere, but
Right.
rather they're going to bail it out. And if they bail it
Hmm.
out, what is the Social Security check going to actually buy? So a lot of in the past, it was relied upon as like a pension, and that's exactly what it is. It's
Hmm.
just an annuity. However, that the amount of pension payment it provides is not that much. And then
Hmm.
there's taxes involved on Social Security, which
Hmm.
people are unaware of. And then you have your Medicare premiums that your Part B that comes off the check once you file. So that number they see is usually much lower than what they actually get. So
Right.
in our opinion, it's not going anywhere. But to your point, don't rely 100% on it taking care of everything. The way I tell people is like, look, consider it a bonus check because you need to rely on yourself and your own self investments, and then let the government that they take your money your whole life through taxation. Once you get that back to yourself, make that gravy. That'll help pay for
I
Christmas.
really love that, and I tell people the same thing: not to rely on Social Security. I always tell people it's just extra bill money. It's like that
Yeah.
extra. It's like supplemental income. I tell them, I said, "What's going to be your main income?" And let's talk about that before we wrap up. Is how do you secure that life after retirement to make sure that you are, taken care of and not worrying about, oh my God, the Social Security is not enough.
Right.
How
And
do we?
that's the problem. A lot of people rely heavily on it, and they don't even run their own reports. They don't even log in and see what they're going to get, and it's not much. So,
I checked mine. It's definitely not much.
there you go.
So, like,
Exactly.
what would you tell someone if they came into your office and said, "Hey, I have no idea what I'm doing. Help me out. How can I secure my future?"
Yeah. Number one, we look at, okay, let's take a look at your assets, liabilities, expenses versus income, and what have you put away so far? And we start by, hey, look, do you really need all these expenses? Let's work on a little micro budget plan for yourself. And then how are you going to protect yourself if something does happen to you? So we take care of all the worst
So
case
you really
scenarios.
get into that budget. You're actually helping them out almost like an accountant would.
Not to the extent of an accountant, but on a high
No,
level,
but it sounds
yeah.
like close enough.
Yeah, because I mean, a lot of times, even ourselves, right? I mean, think about how many little subscriptions you have going on. Like my kids get a hold of my phone, and next thing you know, I'm spending $38 a month on some sticker mobile app or something. I don't know what it is, right? It's stupid. And so you got to go
Uh,
through and trim that down. It's like, okay, to your point, going out to eat. My goodness, dude, a lot of these people they'll
so
spend
much
a
money.
$1,000 a month. I'm like, just make dinner at home or
That's
still go
nuts.
out, but maybe once a month instead of four
Yeah,
times, 5 times.
that's
That
nuts.
number is insane. Put that aside. Is it more important to go have dinner at a restaurant, or is it more important that one dinner can help provide a $500,000 of protection if you see something happens to you?
But
That's way.
the word I always tell people, maybe you do too, is sacrifice. You need to sacrifice some things in your life to be comfortable in the later years. And you have to work hard in the beginning, like the first,
Yeah.
20, 30, 40 years of your life. You should be working hard. But people, at least I'm noticing around me, they take these huge trips and spend lots of money when they could be putting that away. And then they complain later that they're broke. So this is fantastic information. Where can people find out more about you and if they want to work with you?
Yeah, totally. We have two sides. We help financial professionals through educational training and contract access. And then we have a consumer wing where we help people with all the planning. And it's all in one easy site. My name, roysnarr.com. If you just Google Roy Snarr, S-N-A-R-R, I'm all over the internet, just click on there, send us a message. Our team reaches out. And if you want to speak directly with me, you totally can. We don't even charge people money to talk to them. We get compensated by all the financial and insurance institutions. So it's
Nice.
a win-win for the consumer.
That's amazing, guys. Check out roysnarr.com if you want to protect your future. I highly recommend it. Hope you guys enjoyed the episode, and we'll see you in the next one.